So yes.
So I'm going to give.
I was going to say you're giving for your time. You're the next panel, right?
I'm going to give it more of a statement, but I'm going to form it as a question, so it's legal. I have to give the contrarian outlook on this federated private blockchain versus public. I think everybody's missing the point. Bitcoin's true power is disintermediation. To be able to do a true peer-to-peer transaction. The low-hanging fruit, the investment capital is going up to the low-hanging fruit. Wall Street has a lot of money. You're trying to take brand new turbocharging technology from a Ferrari engine, and you're trying to retrofit it into a horseshoe. And yes, you can make that horse move a little faster, but there's a limit to it. The reason why I think the public blockchain will easily outrun all the federated private blockchains is two reasons. Number one, the zero trust attributes of Bitcoin is one of the most powerful attributes you can get. You can't get that in a private blockchain. There's no such thing as zero trust between a small group of entities. The best you could get is you want to trust them. You always have balance sheet risk, Bear Stearns, liquidity risk, Lehman Brothers. You get hacked, the Carbon Act virus, JP Morgan, Citibank, et cetera, et cetera, et cetera. That's one. Number two, you have the network effect. So you only have, worst case scenario, 600,000 unique users of Bitcoin. Contrast that to how many unique users you have with the received product if or when it gets off the ground, or even Ethereum, and keep going down the line.
Chris, one could argue that if Visa decides to launch a Visa coin, they could have 10 million users tomorrow. On the other hand, that will not work during the next currency crisis in Spain or Italy. It'll get shut down just like any other centralized system that reports to the regulators. So there's two different things.
Well, the trustless system has a lot of benefits in a lot of places, and obviously we're all pretty big advocates of Bitcoin here, so no one's arguing we're huge Bitcoin advocates. It's also just helping people understand why are these other trends occurring, why are people using this vernacular, what are the banks doing, and they don't, the benefit that Bitcoin provides from a trust perspective is not their primary concern. They're in the business of understanding who their counterparties are and underwriting them, and if you ask Goldman Sachs, they're pretty comfortable saying, I'm willing to take on those risks, and yes, there are scenarios by which that was a huge problem for them. But that's not their primary goal. I think most of the financial institutions are seeing this as a way of updating their technology in the middle of the back office, and there's billions of dollars of savings to be had. And that's only one aspect of the conversation here. And certainly Bitcoin and Bitcoin's blockchain is the trigger of all of this that is causing that sort of innovation or disruptive event to occur in those institutions. And I believe anything that is bringing people into our ecosystem, whether it be public, private, I think we all benefit from it as a whole. So I think this is a very good thing, and I encourage more of it.
And we haven't even had a chance to talk about other decentralized blockchains besides Bitcoin, from Ethereum to Dash, to things that are used for separate applications, and app coins and altcoins, which could have to be an entire other
if zero proof, sort of a zero proof coin does emerge that works, that'll be interesting to discuss. And certainly, in terms of who the current use cases are, would they prefer that over Bitcoin?
Let me just, because now that you brought that up, and that's the third point. So let's assume, best case scenario, banks are successful in implementing federated or private blockchain. It does work, everything works perfectly. The technology is proven. If the technology is proven, there's no use for banks. If I can deal directly with him in a financial transaction, and I don't have to know him or trust him, why would I go through the bank as a third party, pay the bank's fee, power the bank's bonus pool, go through administrative regulatory issues when I could deal directly? We've seen this story before. Think of the MP3 technology, look at the media industry.
I think we're all in agreement with you. The question is timing.
Because
the question is,
says
what does the world look like 5 years from now and 50 years from now, and everything in between?
Andreas calls it the debanked, the people who actually leave the banking system instead of the
Well, you're seeing that with young people today. I mean, and new mobile sort of financial applications, of which we think, I think Bitcoin wallets are, again, the only problem is Bitcoin is not yet a good currency.
The first to leave the banking system will be the clients of the prime banking, the prime brokerage units. Those will be the small and medium-sized hedge funds, which are being left by the banks anyway because they're not profitable enough to cover the margin that's needed for regulation.
We're going to one last question from someone not on the next panel, and then we'll go to the next.